So the US Fed has made some important decisions in its recent FOMC meeting. And in this video, I'm going to talk about what it means for Dogecoin and other cryptos. So the Federal Reserve has just revealed that it is planning to hike interest rates in March. And it reaffirmed plans to end its bond purchases that month in what Jerome Powell pledged will be a sustained battle to tame inflation. Powell said that subsequent interest rate increases and an eventual reduction in the Fed's asset holdings would follow as needed, and the officials will monitor how quickly inflation falls from current multi-decade highs back to the central bank's 2% target. Moreover, Powell was explicit on one key point that with inflation high and for now apparently getting worse, the Fed this year plans to steadily clamp down on credit. And it also plans to end the extraordinary support it has provided to the U.S. economy during the pandemic. And he said that since the Fed's last policy meeting in December, inflation has not gotten better. It has probably gotten a bit worse. And to the extent that the situation deteriorates further, the Fed's policy will have to reflect that. So this is going to be a year in which the Fed will move steadily away from the very highly accommodative monetary policy put in place to deal with the economic effects of lockdowns. All in all, it is now quite clear that the Fed is going to hike interest rates by March. In fact, it can increase it more later on this year. And Wall Street giant Goldman Sachs has predicted that the Fed will hike interest rates 4 times in 2022 as it grapples with red-hot inflation. Goldman Sachs believes that the Fed will start selling some of its assets as early as July, and the Fed will hike interest rates in March, June, and September as policymakers try to stamp down on price rises. The bank believes the Fed will keep hiking in 2023 and 2024 until the federal funds rate reaches between 2.5% and 2.75%. So if this happens, it will be a much more aggressive set of increases than most investors expect. And these rate hikes and balance sheet reductions could prompt further volatility in stocks and cryptos by pulling down bond prices. And as far as its impacts on cryptos are concerned, if the Fed stays the course, it could amount to a dramatic change to the macroeconomic environment. More to the point, it might be perceived as a major change by investors and employers who would shift their own choices accordingly. And among other impacts, higher Fed interest rates usually draw capital away from speculative sectors like the crypto market. This is because savers and investors are drawn to safer returns in government bonds when the interest rates are hiked. So at the margins, this move by the Fed may pull value out of both cryptos and crypto startups. However, the question is how much money will move to more conservative positions and how fast it will move. I think that the likely impact is unclear in part because of the nuances of the current moment, in which even significant interest rate hikes would still leave rates historically low due to rising inflation. So the point is that we may not see any sudden impact of this Fed meeting on the crypto market. We will have to wait now for the month of March when the Fed increases the interest rates and see how the crypto and traditional markets react to it. And I think this is exactly why we haven't seen a massive drop in the prices of cryptos after this recent Fed meeting. And we can see here that there is a slight drop in cryptos like Bitcoin and Dogecoin. So it appears that investors are going to wait until the Fed increases the rates in March. And this is why they are still holding their coins. However, if we come to the stock market, we can see here that after the Fed meeting, the stock market initially extended healthy gains from earlier in the trading day. But it then reversed lower into negative territory as Powell spoke. The Dow Jones Industrial Average fell 0.4%, while the S&P 500 lost 0.15%. And the Nasdaq Composite, which had borne the brunt of Fed fears to start the year, rose as much as 3% on the session but turned negative as Powell spoke. After the Fed policy news, the 10-year Treasury yield rose about 7 basis points to 1.85%. However, the 2-year Treasury yield jumped about 13 basis points to 1.15%. So the point is that the upcoming interest rate hike from the Fed is looking not so promising for the stock market as investors will rush into the 10-year Treasury yield bonds. And it is expected that if the stock market plunges from here, or when the Fed increases the rates, the crypto market may also plunge. This is because Bitcoin's movements are now mirroring those of U.S. stocks to an unprecedented degree. And a 40-day correlation coefficient for Bitcoin and the tech-heavy Nasdaq 100 has reached almost 0.66, the most in data compiled by Bloomberg since 2010. while a similar correlation with the S&P 500 is at a record too. And this high correlation was one of the main reasons why we saw Bitcoin and other cryptos crashing last week along with the stocks. And it appears that this increased correlation between Bitcoin and the stock market is due to increased institutional interest in the crypto market. We know that in its early years, the crypto market did not receive any support from Wall Street. The market was mainly composed of retail traders. However, this has greatly changed over the past year due to increased demand. Last year, some of the leading institutions on Wall Street, including Goldman Sachs and JP Morgan, warmed up to Bitcoin and the overall crypto market. And since then, institutional demand for Bitcoin and other cryptos has increased. So the point is that there is now a high correlation between cryptos and stocks. And if the stock market falls after this decision by the Fed, then it is highly likely that the crypto market will also fall. But the good thing is that the stock market will recover soon after it falls. And this will also fuel the crypto market to move up. And this is exactly why I think that even if we saw a massive crash for cryptos, there is nothing to be worried about. Instead of taking actions on short-term market outlook, crypto holders should keep an eye on the long-term outlook. And the long-term outlook is looking very promising for cryptos like Bitcoin, Dogecoin, and others. This is because there are a number of reasons that are going to help the market grow. And one of these reasons is going to be the approval of a spot Bitcoin ETF from the US SEC. So after rejecting some proposals for spot Bitcoin ETF, the SEC isn't rejecting the new proposals. In fact, it is simply delaying the decision in order to take everything into consideration before making a final call. And just recently, the SEC has extended its window to approve the ARK-21 shares Bitcoin ETF originally proposed in July 2021. The regulatory body will push the deadline for approving or disapproving the ARK-21 shares Bitcoin ETF from February 2 for an additional 60 days to April 3. Similarly, it also delayed the decision on NYDIG's proposal for a spot Bitcoin ETF. The SEC has extended the time period for ruling on this spot Bitcoin ETF by 60 days in order to have sufficient time to consider the proposed rule change and any comments received. So this is a good thing. And as I said, the SEC is not rejecting the proposal. It is just trying to explore things. And I think that this may be a turning point for spot ETF. And the SEC may accept these funds sometime in the future. And if the SEC accepts a spot Bitcoin ETF in the future, then I think it will be a game changer for the crypto market. A spot Bitcoin ETF will encourage more and more institutional investors to invest in crypto funds, eventually growing the overall crypto market. And the best thing is that a spot Bitcoin ETF can help the crypto market to come out of the turmoil it may face when the Fed tightens its monetary policy. And this is why I think that the long-term outlook for cryptos is still bullish. But I'd like to remind you that this is not financial advice, and I'm not a professional financial advisor, so it would be best if you do your own research before investing in cryptos. And some other positive news for the crypto market is that crypto adoption is expected to rise dramatically in 2022 and beyond. And as per a report from Crypto.com, the number of global crypto owners is expected to exceed 1 billion by the end of this year. The report revealed that the global crypto population increased by 178% in 2021, rising from 106 million in January to 295 million in December. And this rate is going to increase throughout this year, and it is expected that the number of crypto users will break 1 billion by the end of 2022. Moreover, it is expected that countries can no longer afford to ignore the growing push to crypto by the public. And we may even see in some cases a friendlier stance towards the crypto industry, eventually increasing crypto adoption. And talking about crypto adoption, San Diego State University has recently announced that it is now accepting donations in Bitcoin. And the executive of the university has stated that Bitcoin donations will open the door to more contributions and a wide range of never-before-imagined programs of research and teaching in crypto. So this is positive news for the overall crypto market. And now let's come to Dogecoin for a minute. So we can see here that the recent Fed meeting hasn't affected Dogecoin's price a lot. Although it was expected that Doge may see yet another drop, it is good to see that holders have avoided panic selling. And this is why I believe that Doge can sustain such market pressures in the future as well. And it is going to perform much better over the long term.